Tesla's stock has gone up close to 90% since last November when it was added to the S&P 500 index. So why do investors make a lot of money when a stock gets added to a large index like the S&P 500? Well, the first reason is that close to $8 trillion of money that large institutional investors like pension funds manage is actually in the S&P 500. It's a big deal. And the second reason why stocks go up a lot when they're added to the S&P 500 is because more and more investors are choosing not to buy mutual funds, which have high fees with low returns. Instead, what investors have been doing for a while now is they've been buying ETFs like ticker SPY. And ticker SPY is an ETF that you can buy that represents the 500 stocks in the S&P 500. So what happens is when a company like Tesla gets added to the S&P 500 index, then of course, when investors buy the SPY ticker or they invest in other S&P 500 ETFs, they're also buying Tesla. All ships rise. And the S&P 500 is actually managed by a company called Standard & Poor's. And the 500 stocks in the S&P 500 represents the U.S. economy. So as you do your investment research, which I teach in my MBA degree program, if a small part of your research uncovers the fact that, hey, this company should be in the S&P 500 one day, then this could actually be an incredibly positive catalyst for the stock and push it higher. And the inverse is true, of course, for short sellers and buyers of puts who profit immensely when companies are taken out of the S&P 500. You know, as those stocks get crushed. And what I'll do is I'll actually teach you much more about this in my upcoming Complete Options course. Now, ETFs are a better investment than mutual funds as the fees are lower. And I want to show you my favorite ETF website, which can actually help you decide which ETFs to invest in. So what we're going to do is we're going to go together to a website called etfdb.com. That's Exchange Traded Fund Database.com. Here we go. Cool. All right. And what you can do here is you can look through thousands of ETFs, right? So for example, say you want to invest in Brazil, for example. So you go here, you look at ETFs by country. You scroll down, you select Brazil, and then what you can do is you can pick an ETF here. Now, I'm going to pick this one, which is the ticker EWZ. That's how we say Z in Canada. Okay, this is the ticker for Brazil. And you can do research on it here by looking at the holdings. But what I recommend you do instead, and by the way, never pay for any websites, just use all this stuff for free. It's all out there. Eh? So let's go to finance.yahoo.com. And what we'll do is we'll type in the ticker for the ETF for Brazil, EWZ. Okay, we can type SPY if we want to as well. And so the first thing you do when you look at ETFs, okay, the very first thing you do is you look at the fees. You want to make sure the fees are way under 1%. And so the annual fee for owning Brazil, okay, the Brazil ETF, we can see here it's 0.59%. So that means that for every $100 you put into this ETF every year, you pay 59 cents, which is actually a good deal. It's a good deal. Much lower fees than mutual funds. Then what you do next is you always check liquidity. You want to make sure that this thing trades a lot so that you can get in or out, God forbid, if you need to. Because we learned in 2008, hedge funds did, that illiquid stocks own us in a down market. And so what we do quickly is we look at the price, 34 bucks, and we look at the average volume, 25 million. Yes, we can get in really, really quickly and out as well if we need to. Okay, so the bottom line is that being added to a massive index like the S&P 500 can be an incredibly positive catalyst for investors and short sellers that are actually terrified of GameStop, ticker GME, because GME might soon be added to the S&P 500 when the index gets rebalanced. Because one of the criteria for index inclusion, meaning to be part of the S&P 500, is the market cap must be at least $13.1 billion. Thanks.